Hi, this is the week of March 23rd, second week back from spring break, and we continue with our online courses here at Marquette University. For FINA 4320, we're still going to be using material that's been loaded into D2L, voice over PowerPoint, PDF readings, and quizzes to cover a lot of the material on factor analysis. What we're doing here with this particular video is we're trying to show you the performance of the AIM funds using factor analysis and scenario analysis based on some of the modules that are available within Morningstar. That's a tool I haven't introduced to you yet, but when we're back in the AIM room, we have access to Morningstar, which has some very useful performance metrics that we'll begin to use in the AIM program. So we'll start with the small cap fund, which by the way has been outperforming the benchmark on a year-to-date basis. Morningstar has a lot of performance reports that are available since inception, over the last 10 years, 5 years, 3 years, year-to-date, you name it. Here's just a very quick snapshot of how the AIM fund has performed long-term since inception, September 2005. Here's a look at the top holdings as of the end of trading on Friday, March 20th. We have a fairly heavy concentration in Teladoc, the online healthcare doctor in a box, which has been performing obviously very well. We'll continue to hold that. It's approaching its 5% position, which is the reason for the slight trim that we're going to do today. As I said, Morningstar has a lot of different ways to look at portfolios. Here we can look at our sector mix. Now note that Morningstar uses a sector alignment slightly different than GICS. I mean, they're similar, but there are some small differences. You can see here where we're over and underweighted relative to the Morningstar benchmarks. Morningstar was actually the originator of the 3x3 style size mix box, which you can see in the lower left here. Again, for the AIM small cap fund, there's definitely a growth tilt in our portfolio, and we have a slight tilt towards mid cap versus micro cap. This one-year chart definitely highlights the impact of the last 3 weeks. That's a dramatic decline that's taken place not only in our fund, but across all indexes, including the Russell 2000 index. In a couple of weeks, we'll begin to talk about different performance measures. Alpha is one of the best known ones because it measures a manager's performance versus the benchmark. A positive number there indicates the true value is being increased relative to risk. Proud to say that small cap fund over 3, 5, and 10 years has posted some very strong alphas. Now you're familiar with beta. Not surprisingly, our beta is slightly greater than 1, given that we have a growth tilt. You maybe haven't seen R square yet, but it talks about how true we are to the benchmark. A 93 R square is fine. When you get above 95% and approaching 100%, you might as well own the ETF for that particular benchmark. On this slide, we have two very interesting charts. The one on the top shows the performance of the AIM fund since inception, which was September 28th, 2005. As you can see, the drop over the last 3 weeks has been the most dramatic since we've started managing money in the AIM program. Much worse than the performance that occurred in 2008 even. The bottom chart is your performance, and as expected, on a year-to-date basis, you're still beating the benchmark, but the absolute returns are negative, greater than 30% losses on a year-to-date basis. Now here's where it gets to be a little different and I think interesting. Using factor analysis, we can not only look backward, but we can also use factors to help us project forward how a fund would perform under different scenarios. Here's one where we're looking at a large drop in oil, and we're looking at the performance of what would be the AIM fund and the benchmark over this period of time going forward. As you can imagine, a drop in oil prices, while it hurts the energy sector, helps many other sectors. If there were to be a large drop in oil, based on the holdings that are in the AIM fund the factors that have gone into the construction of the particular portfolio, you could see that we would outperform the Russell 2000 index under this scenario. We will get into this in more detail, but the idea of using factor analysis to not only look backward, but to help us go forward and project out how a portfolio would perform under different scenarios can be used. Here, if there were another large financial crisis similar to 2007, 2008, here's how our fund and the Russell 2000 would be expected to perform. Note that it's quite similar and a large drop. I would contend that basically the last 3 weeks with the coronavirus, we have seen the equivalent of the impact of the financial crisis of 2008. You get the idea here. We can continue to look at different scenarios. Within Morningstar, there's probably 20 major or minor black swan events that we could look at different scenarios, as well as create our own custom scenarios. Here's some examples of how our portfolio would perform under different types of events, such as increased market volatility, an oil price increase, or other events. While in the last couple of slides we had a chance to look at what the time series returns might look like going forward, here we can look at the actual performance metrics of what we just saw. We can look at the impact over a period of time of what returns would be, standard deviation, and other risk metrics. And you can see that we can also compare these forward-looking scenarios versus benchmarks to see whether we would generate alpha under these various imposed scenarios. So within Morningstar, they have some very nice tools. You have the ability to look at what would be forward-looking performance, not only versus a benchmark, but maybe versus peer funds. In this case, I looked at our performance going forward based on factor analysis versus the Baird SMID fund. Okay, so let's turn our attention to the AIM International Fund, which over the long term has been doing well, but of course has suffered some rather dramatic decreases in value over the past 3 weeks. Here are the top holdings. Lululemon and L'Oreal continue to be our largest holdings. Interestingly, on a year-to-date basis, the only international stock that's above zero is L'Oreal. As with the small cap funds, here we're looking at the sector mix of the international fund. These again are Morningstar sectors, but they give you an idea as to where we are over or underweighted relative to our respective sectors. Similar to the small cap fund, we can also look at the size and style mix in a Morningstar perspective. Here you can see that with the international fund, we have a tilt towards large cap, which is not surprising, and we also have a balanced fund. We have about an equal amount of value and growth stocks within the international portfolio. Here you can see again how the performance has fallen off dramatically for both the index and the small cap fund over the course of the last 3 weeks. Not surprising given the coronavirus outbreak. The last 3 years have been relatively strong for the AIM International Fund. We've generated positive alpha. Over the long haul, we still are right at about the benchmark for overall returns, and hopefully we can outperform the benchmark moving forward for the remainder of the year. Just like with the small cap fund, these charts demonstrate just how large the drops have been recently. I mean, the bottom has literally fallen out of the international markets. This is one of the most dramatic declines in global stock markets on record. And this chart just highlights the depth of the drop. Now for us, the last week, we lost about 1,000 points to the benchmark. We'll dig in deeper to find out specifically. There has not necessarily been 1 or 2 stocks that have blown up. It has been a general underperformance of the overall fund. We'll have to take a closer look to understand specifically what might have changed in this last week. Here again, we can use factor analysis and make some forward-looking scenario estimates based upon different outcomes, such as a price drop or market volatility or another type of financial crisis. And not surprisingly, performance of the fund would be weak in many of those scenarios outlined here. If we wanted to focus in on a black swan event, like a continuation of a financial crisis that we presently find ourselves in, you'll see that going forward, based upon the holdings within the portfolio and using factor analysis, looking forward, while we do produce negative returns, we would outperform the benchmark given our current mix of holdings relative to the MSCI All Cap World Index. Well, we could look at the time series charts like we did on the previous slide. Here we can take that information and look at returns, standard deviation, excess return, tracking error, some of the key metrics that we look at to evaluate the performance of a fund manager. In this case, our portfolio seems to be set up fairly well for black swan events versus the benchmark. And again, here's some forward-looking scenario analysis under different types of events, or black swans as we tend to call them: financial crisis, volatility, oil price movements up or down, currency collapses, other types of major calamities that could impact the financial markets. So to conclude, while you're studying factor analysis and appreciating the different nuances of it based on the style, size, growth, income, volatility, all the other factors that have been discussed thus far in our voiceover PowerPoint lectures, it's useful for evaluating past performance, but probably one of the greater values of using factor analysis is to use it forward-looking, to make various estimates about macroeconomic events or others, to find out how the portfolio would perform versus the benchmark and versus its peers. So over the course of the next several weeks through the remainder of the course, we'll continue to blend together factor analysis, portfolio analysis, performance metrics. We can study this not only from a textbook or conceptual standpoint, but because we have the 2 live active AIM funds, we get a chance to practice this on real securities. Hope everyone's doing well. Stay healthy. We'll continue to refine the approach that we're taking to delivering the curriculum here the remainder of the semester. Take care.